Now, here to explain that number to us, and not the stock market, is Jonathan Spector. He's the CEO of the Conference Board, and he joins us here at the New York Stock Exchange. Thanks for coming down here and joining us. Let's talk about that number. It was about 10 points worse than expected, the lowest we've seen it since April of 2009. Why so bad?
Well, I think consumers are, reacting. They're concerned about the future. The number is made up of actually two components: their sense of what the current situation is and their future expectations. Current situation didn't go down by much, a couple points, but the future expectations really dropped. And I think what they're looking at, frankly, is the disorganization in Washington, the inability to come to a real decision about a future economic program, and they're worried that that debate is going to continue unresolved.
Talk to us about the time that you did this survey, because it was obviously during a period of real market turmoil here, the S&P downgrade of U.S. debt. I mean, it was a dark, bleak moment for America.
It was, and that obviously reflects how consumers feel in the moment. The survey, the August Consumer Confidence, which was released this morning, is conducted from about July 20th up until August 18th was the last date. So it reflects right through that critical period where the debt decisions were made and where the downgrade took place and so forth.
So what does it say that we come to the same point that we were in April 2009? Because if you think back, obviously, that was pretty much the bottom for the stock market. We took off from there. The economy had pretty good growth from there as well.
Yeah, I think that it's, there are some parallels, obviously, in terms of consumer confidence. And there may be parallels in the stock market, but I think the economy is in fundamentally stronger shape. It's not robust by any means, but the economy on many measures is in stronger shape today than it was 2.5 years ago. And I think that's why most economists are forecasting, we're slowly going to crawl out of the hole that we came to from the last recession.
We do see consumers buying more big-ticket items than the smaller things, right? I mean, the durable goods, the car sales are better than non-durable goods and services. Why do you think that is?
I think because I think overall it's important to remember how bad it was back then. I mean, we were discussing literally falling off, the edge of the economic cliff. Things are troublesome today, but I don't think they're nearly as bad. Remember, that was a time when the economy was contracting. We grew in the first half of this year at between 1.5% and 2%. That's our steady state growth rate right now. And that's much, much better than it was 2.5 years ago.
So a lot of people this morning, when trying to explain the swing in the market, the gains that we saw a little while after this number was digested, were saying it's so bad that it has to be the bottom. I mean, it can't really get any worse than a 44 reading on consumer confidence, right? What do you think about that idea?
Well, I mean, I'm not here to forecast the market. That's your job. But I think there's a question in our mind as to whether this is a shock, in which case it would recover fairly quickly over the next 1 or 2 months, or whether or not it's a more permanent adjustment to, sort of a realization that we're in a slow growth economy and maybe in something riskier than that.
Well, when you look back at when you did the survey, right? I mean, the downgrade, the infighting in Washington, the volatility in the market, as long as September is a calmer month, right? Both politically and financially. Do we see a pickup?
Well, again, it's hard to predict, but yeah, I think that's really the question. I think there are two scenarios, and absent the kind of drama that we saw in the beginning of August, I do think consumers will respond. But I do think you mentioned two things. One was the economy, but you also mentioned, again, the decision-making in Washington, and I can't emphasize that enough. Most of the time, the Consumer Confidence Survey is a survey about the economy. In our view, this time, it's a survey about leadership of the country. Not for any political party or any partisan observation, but I think consumers are voting this month, and they're saying, we want Washington to fix the problems. We want them to come together and agree on something, and that's, I think, one of the things that's going to be needed to move
Fortunately,
forward.
we have the super committee to look forward to, so let's look forward with a little bit of optimism. Jonathan, thanks so much for joining us. Jonathan Spector, the CEO of the Conference Board.